Hi, I'm Chris Reid, Managing Director of ASX listed green battery materials producer Neometals Ltd.
Chris, welcome to London.
Thank you very much, mate.
Yeah, we've just walked out of an investors luncheon here. You stood up on stage, got some good questions thrown at you, I thought. Anything surprise you there, or was it to be expected?
No, look, as usual, pretty precise and to the point. When are you going to make money?
Well, fair question, right?
Absolutely.
You've got, and we've talked a number of times, and we've done some kind of in-depth sessions with you and your guys and the rest of the team. It can get complicated, right? You are running multiple projects in multiple jurisdictions with multiple commodities, but pretty much with the same thematic running through this. So we're just going to keep it simple today, I think. Yeah. Well, for me and anyone new to this, I think that's important. Should we have the rule of three? Three things that people can remember. What do you think the three things that people need to remember are?
You look, so for us, and yes, we do have a portfolio of projects underpinned by our technologies, and they all produce green battery materials. So green battery materials would be one. So, when it comes to recycling, you're unscrambling the egg. So you're recycling an urban waste, which is the battery at the end of its life. You're producing hard commodities, nickel, cobalt, lithium, out of those for reuse, and you're doing it at the lowest point in the cost curve. And it's more capital efficient than building new refineries
or mines.
Or mines. So it's the carbon. So that's where we say green battery materials. They're high purity. They're battery materials. They come from wastes. They've got a low carbon footprint, and they're low cost, high purity products. So I've blown the rule of three away.
I know. It's three things.
It'd be 3 to the power of 3 cubed.
Okay, look, I'm determined to keep this simple because I heard some of the questions out there, and I was sort of surprised at the sort of simplicity in some ways because they were honed in on "show me the money," which is not a bad question to ask, but no one really wanted to kind of dig down. I think that's pretty fair. We need to remember that. So again, if you look at some of the conversations from today, and maybe some of the conversations that you've had around London, and you've also been trotting around Europe at the same sort of time, what are the concerns out there? And ask that in the context of energy security, energy pricing that's going on here. We've kind of got the Russia-Ukraine situation going on in terms of commodity flows, and can projects get financed? Who's financing this and this sort of thing? So what are the things that they were worried about, and what are the things that perhaps you think you need to pay attention to?
Yeah, so look, I haven't seen that many investors on this trip. It's really been more about seeing our partners in the different businesses that are all in Europe. But certainly, for strategic or critical minerals, of which all of our materials are. So everything that's in a battery is critical. Mm-hmm. The vanadium recovery from the steel slags, it's critical. Lithium production from Portugal is critical. So there's fantastic support from the EIB, NIB, those types of sort of investment banks. And obviously producing green battery materials, you've got keen interest from the commercial banks. They've got these green pools of capital they need to deploy. There's not a lot of truly green investment opportunities like this. So the appetite for debt and equity is just palpable.
Right.
So you can feel that. But getting back to show me the money bit, we're rapidly approaching the investment decision points for a number of projects. Right. Then once you make those decisions, then you'll have timelines to deliver cash flow. For the battery recycling plant at Hilkenbach, we are selling product now. So we're shredding batteries, getting paid to shred. We get to keep the black mass. We're selling that, getting paid for the contained nickel and cobalt, and receiving funds. And that's ramping up, and the cash flows are ramping up for that. So at steady state, that will make a small profit, which is fantastic for something at that scale. And so the next investment decisions, or the next catalyst for us, are the Mercedes-Benz supply agreement for that plant. We expect that's a great commercial validation because we're giving it to them royalty free, the technology, but we are charging them for the plant. So that's where we'll make some money. Stelco is the big first truly commercial operation to make a commercial return for Primobius.
That's the Canadian outfit.
That's the Canadian one.
Okay.
So we've forecast that we'll make that decision early in the new year.
Right.
For Stelco.
Tell me this, because you're quite tight. I've seen you in a bar. You're quite tight. So I want to understand the thinking here.
It's the first time I've ever heard that.
Is, look, you're very clear. You don't do M&A, so you don't pay for overpay for stuff in terms of wanting to rush into a situation, have to raise a bunch of capital to pay for something. You've developed the technologies yourself, okay? You have got various business models which you're employing with three main projects. We'll call it in terms of like Finland, Germany, and Portugal, where you're kind of using other people's balance sheets in some instances, or they're entirely paying for capex in others, or you are saying we have got the option at some point where the final investment decision needs to be made as to how you put money. But at some point on some of these, you're going to have to potentially get out to market and raise capital.
Sure.
Right? Yeah, probably, all things being equal. You'd have to do that now, so it's not a case of we need to make a decision in a very difficult market, but you're going to move very quickly to that point. And there's also, layered on top of this, is this kind of cookie cutter approach to being rolling out all of this stuff. So there's a little bit of pressure on you to, I guess, give guidance to market at some point, presumably in the next year or so, as to what this company looks like in terms of its ambition and its scale and how it, I guess, protects itself from some of the vagaries of the market at the moment.
Sure. So I think, if you have a look at all of those projects, the battery recycling, the vanadium recovery, the lithium chemical production, they'll all be down at the bottom end of the cost curve. So you can invest in those projects confidently. You have to fund your growth pipeline. So there's no use pretending that you can have all this and not have to put in money. And so we're very cognizant of that. So when we go to the market, it will be to invest in real plants.
Yeah.
It's not, we've funded all the R&D, the evaluation and commercialization off our own balance sheet. We haven't raised money in more than 10 years. In fact, we've returned $82 million back to our shareholders. Yeah. When we go back, we will have a very, very good reason, and that's to grow the business. So, and once you get the first plant up and running in either of those businesses, and they operate at steady state, and you have a cookie cutter approach, then you can look at financing and adding leverage to it to start off with. I don't think it's wise ever to perhaps leverage the first plant in any new technology, but to take that as equity. And hence, we're doing that in a manageable way with Stelco, where if we exercise the option, Primobius exercise the option to buy in 50%, Neometals will have 25% direct interest in your first big scale plant. Now that's palatable for us because we're confident that Stelco will employ a regional, because the licensed area is North America. So we'll have a network of plants in North America over time. And then when we get to the really, really big plants in the future, we've got the flexibility because we've got three business models. So Hilkenbach's, we're operating as principal. Stelco, we can buy into a joint venture, or plant supply and licensing. So for the really, really big plants that are $500 million to $1 billion capex, we can elect just to revert to a royalty. And not to have that big impost in terms of capital. So when we say we're tight, I'm not sure ever at a bar, but we are very, very careful with our capital. And deploying it. And we do try to build the pie and bring in big multi-billion-dollar companies to really take it to that next level.
Now, it makes sense. I've understood the sort of stepping stones from, Matt Marion being a miner and then coming into, you framed the company differently during this evolution, right? And I'm sort of intrigued as to what it looks like next, because when I go and talk to multi-billion-dollar mining companies, they've got multiple assets around the world which they're mining, I kind of don't care about what the things are that they are mining. I care about the bottom line on the balance sheet. Have they delivered the number of ounces or pounds that they said? Have they done it with the economies that they said? And it's kind of the same for you. You've kind of got this multi-layered, multi-revenue opportunity, I guess, de-risked in a way, although feeding into the same thematic, slightly de-risked in that sense. What's the point at which you get to where people say, that's Neometals, they're a fill in the blank
materials producer?
Well, today it is. What could it become? And that's what I'm so intrigued by. Where does this go?
Yeah.
Or you decide, hey, I'm going to spin some of these things out, and that's a sort of very small company mentality.
I mean, look, we have done that in terms of, you've got internal competition for capital in the business, right? And as they go to investment decisions, we expect the project teams to bring up proposals to the investment committee to deploy, right? And they'll get prioritised accordingly. And for the ones that don't give the best ones, they'll, all of them will operate at the bottom end of the cost curves, and all of our assets, including the hard rock titanium asset, are extremely valuable, right? And, we have taken the approach where, same with our nickel business, but we just couldn't see the nickel exploration, right, fitting in with the battery thematic. If I hold I'm getting the lithium battery recycling, 60% of the revenue is nickel. And I'm at the bottom end of the cost curve, and batteries get delivered to me every day, and I charge. Or I can invest and build a mine and a concentrator. Okay, I'll go for this one first. But this is still a great asset, and it will be developed
at a moment in time,
right? So you give it back to the shareholders and say, it's yours. We're listed as a separate company. You owned it anyway. And you can choose whether to put more money in or not. But we'll make sure it's funded so that it can get into production. So, when you have a portfolio approach, it's not unlike mines. A lot of the big mining companies, they sell their smaller mines and buy a big one, and they asset trade. Where we're like, well, actually, we're happy to buy something counter-cyclical or early in the thematic when people think you're crazy, like battery recycling, and you can build stuff up. And then at the appropriate time, give it back to the shareholders. And I can say, well, look, for example, Barrambie, here it is. It's got a granted mining license, ministerial approval to construct a concentrator. Here's the latest and greatest cost studies. Here's what we think we can get for the offtake. We need to do, a full feasibility study, 2 years, then we can put it into production. So you can invest in it or not, but it's yours. You owned it anyway.
So tell me, I'm trying to work out what the future looks like, because I think that's where you've got to sort of tell a growth story, right? So it's a fair question to ask you, right? So if you look at sort of the moments from Mount Marion to now, I'm trying to work out what are the decisions that you've made which just changed the opportunity ahead of you. Like say, we've gone from miner to we are going to look at green metals. We are going to bring a green materials company. What's the next step which changes the trajectory of the company? Because I've stopped looking at the admin. Can these guys come up with a decent business model? Yep. Can they bring these industrial partners in with big balance sheets to help deliver? Yep. Can they actually deliver on what they say they're going to deliver on? Yep. So I've stopped listening to that, because you can do that. I have full faith that you can do that. Yep. What I want to see next is what's the kind of step change beyond after delivering these kind of first 3 projects? Yep. What are the opportunities?
Well, manifold opportunities, right? In 2 years' time, you will find that we will have, for the battery recycling, commercial scale plants up and running. So I say, Matt, I've got a pipeline of this many 50-ton plants. I've got one operating. The economics look like what we estimated. We're making more or less, because ultimately we won't make whatever the number was in the study. It'll be more or less, hopefully really, really close to it, right? Otherwise, we have to shoot the engineers. So
again,
I'll get more of them. And so then you can start to value what the pipeline looks like, right? So we're at the stage now where in 2013, 2023, 2024, we've got to execute the construction and the commissioning, right? Now, some people would call it the valley of death. If you had one project and that's where all your money went and there's nothing else for you to do if that fails, and, you know, we've been in that situation before a decade ago, where you put all your eggs in one basket in terms of putting all your money in, doesn't quite work out. Fortunately, we had Mount Marion and Barrambie as our second and third assets. So we had another life. But what we're doing here is we're doing it with partners to start off with and take the risk out, and then we can amp it up and deliver more. So we've taken as much risk out of the commercialisation, and now it's the execution.
No, I get that. But again, it's kind of, for me at the moment, it's the kind of bit of the conversation which I want to move past, because I trust that you will deliver. You will execute. You've done it so far. I believe you will do it moving forward. And then you get into a kind of cash phase, but that's just cash. Cash is boring. It's what the cash allows you to do next. What's the ambition next? What are the opportunities out there? I mean, can you look that far forward?
Oh, absolutely. So as soon as we get started on the 50-ton plant supply agreements, then Neometals will go back, and our engineering teams will go back and start to take the 500-ton a day plants that we thought that we'd need to be developing ready for next decade. We're going to need to bring them forward. Because everything's coming at us. It's becoming steeper and it's getting closer to us. Right? So, you know, case in point, at Hilchenbach, we thought we'd feed it with cells, and we thought we'd have time before we had to treat end-of-life packs. In reality, 70% of the feed for Hilchenbach is EV packs. Right? That we now have to discharge and disassemble. We didn't envisage that we would need to do that for a couple of years. But we've had to do that over the last 6 months.
Urban mining, right? Great.
It's a concept.
Concept, recycling, and that, I'm not just the batteries, but I'm also putting the vanadium in there, right? But what you have this slightly exciting prospect, or well, it's a project, it's a proper project with a proper partner down in Portugal, the chemicals side of the business. I'm sort of intrigued by that. You look at the kind of multiples that chemical companies get, they sort of quietly go about their business, but they're some of the most successful and most profitable in the world. Where are you taking that project?
So that project, you know, we're co-funding it with someone who's got specialist skills. So it's turning a chloride into a hydroxide, and they do that every
English,
day.
Please, for the audience.
Yeah, so they turn salt, table salt, right, into caustic soda, so which is sodium chloride into sodium hydroxide with electricity. We're just going to change the sodium salt to lithium salt.
And what does that do?
Makes lithium hydroxide that you need for these batteries.
There you go.
So what it does is it enables brine production, right? Lithium chloride, which is lithium in water, to actually be a saleable product. They don't have to try. The hard bit is trying to make lithium chemicals up in the Andes at these salt lakes. It's really remote. Like, you have to cart your reagents from Buenos Aires 1,000 kilometers up mountains, right, to try to make chemicals in the middle of nowhere.
And these salars.
It's crazy. So why don't you just concentrate the liquid?
Right.
It has twice as much lithium in it as spodumene.
Yeah.
And then cart it to Europe, where we can make it fresh for the car makers. So, you know, the old FMC and SQM and Ganfeng had a lithium chloride export business for, between them, 10 or 15 years that was going. But in the current boom, they haven't had to, because they're all processing their own stuff. But there's a lot of developers out there that can develop the ponds to evaporate, which is easier than trying to make high purity chemicals in the middle of nowhere.
Yeah.
So you come to Europe, where there is unbelievable depth in the chemical industry. We've got the equipment already sitting there. And instead of selling caustic soda for 1,000 a tonne, you can sell lithium for plus 50,000 a tonne.
Yeah.
So it's dangling the carrot there and saying, if you de-risk this with us in this joint venture with Bondelti, that joint venture will have the license for that technology for all of Europe. Right? And Europe needs 500,000 tonnes of domestic lithium production, or it needs to be imported, but that's hard.
You said something actually in the lunch session here when you're up on stage, or certainly in front of the room. You were talking about Europe putting up walls around their battery ecosystem, the way that China has. America's a little bit further behind, but getting there. They'll definitely play catch up.
California's done it.
You know,
so I expect
a
the rest
few
of the
interesting. Yeah, exactly. Lots of plants being built and lots of contracts being talked about and lots of investments by the car manufacturers out there. It's starting. But Europe is putting up these walls, protective walls, and it's about kind of keeping everything in sight, closed loop system. So your 3 projects pretty well
so one's recovering it from wastes.
Yep.
One's recovering it from end of life batteries. The other one is just importing a intermediate.
Yeah.
And doing the finishing, the conversion into Europe.
Right.
But
how do you take advantage of that? Because like if the walls are going up and you've kind of got this massive hundreds of billions of dollars being invested by everyone. It's not the industry is the reality of the situation.
Yeah.
What the markets are doing right now, I kind of don't care. There's a massive industrial complex they're building for batteries, which is where you're sitting. Yeah. And that's exciting because that's the reality of the runway ahead of us. But how do you take advantage of that? Because you must be getting a name for yourself in multiple jurisdictions now.
Yep. Well, you just get more staff.
Yeah.
So I think we grew by about 60% our headcount in the last 18 months.
And it's incredible because it's like, we used to get some government contracts and stuff. And once you've kind of got one contract, another department comes in and says, well, can you, do you, will you? And I just wonder if it's same.
Exactly. Anyone doubts the technology, as soon as you come along and you're a technology partner for Mercedes-Benz.
Yeah.
Now it's like, oh, well, where are we in the queue?
Yeah.
How do I get in front?
Yeah.
How do I get to the front?
Yeah.
How do I get to the front? And you're just like, mate, you can't.
Yeah.
Like I've got to look after my contracted customers first before.
Yeah. It's an interesting kind of first mover advantage there into the thesis, but also into the jurisdiction, essentially. Now, look, I'm so conscious that you've got to go off and see a big bank in a second. So I am, to let them know what you're up to, I think you need to redeem yourself on this 3 thing again. So finish us up. Give us 3 simple things we need to remember.
Green battery materials, low carbon, high purity, exchange traded commodities.
Good to see you in London.
No dramas.
I'll see you again soon.
Thanks, mate.
Yeah.
I'll buy you a beer.